In this video, I'm going to show you how you analyze the market when you are trading using Weltrade TradingView. This broker is very easy to use, especially if you want to trade synthetics. So here we have different types of synthetics. Let me show you. As you can see, so many of them. So when you are trading, you have to make sure that you analyze your market using top-to-down analysis. Then you have to analyze your market on a big screen. For instance, here we can see that here there's a flag whereby the market was dropping, then suddenly it started to make this kind of a pattern. Then here is our breakout, then it crossed. Usually we will enter here. So if you analyze this thing using a big screen, you're most likely to get a good signal. But if you analyze on a phone, you might see a biased signal because it might show you a breakout, but if you go on a bigger time frame, it will not be a good breakout. So you might end up incurring huge losses. So always analyze the market using a big screen. Then on the other hand, if you see a good setup, avoid scalping. If it's a good setup that you can see that the market is going to drop more, always remember to hold that trade so that you can maximize your profit. Entering too many trades per day can affect your profit because if you enter this pair, then you enter another pair, then you enter another pair, you're most likely to end up lose a lot of profits. But if you reach your target using one trade, then you're good to go. Avoid over trading by all means. So we're going to be analyzing using different concepts. If you are new to this channel, just click the subscribe button. And if you want to join our free Telegram channel, you use the link that is in the description. So today we're going to be analyzing from a bigger time frame to smaller time frame. So let's say you want to start trading. The first thing you do when you open the trading view, you should go and check the hourly time frame. So I'm going to open the hourly time frame so that we can see the overall trend. So here, this is our hourly time frame. As you can see, guys, what are we seeing? In the long run, the market looks like it's buying, but around this area, the market looks like it's selling. Okay, so right now, let's go and check the 4-hour time frame. Right, this is now the 4-hour time frame. If you check, you can see that the market is not yet crossed this zone, so we cannot say the market is now dropping because right now it still looks like it's still bullish. The market is still going up. So what you do is you go back to your H1. Then you're trying to figure out the pattern that is going on there. So I'm going to look for my parallel channel. You click here, then you look for the parallel channel. So this is going to be my parallel channel. Touch all the visible points like this. Then you make sure that it touches all the visible points here again. So this is what we have. As you can see, our market reached the bottom trend line. Then after that, it started to pull back. So there's a chance that the market can pull back to this line or it can cross this line. So the moment it crosses this line, showing you a good candlestick, a long candlestick, it means the market is now what? The market is now dropping. You get it? So we should look for an opportunity there. So here I'm going to look for another pair so that we can see whether we can trade that pair or not. So what you do is just click here and we look for another pair so that we we see if we can catch a spike. So I'm going to check on this pair. All right. So this is gain 600. As you can see, if you check clearly, what are we seeing? The market is dropping, guys. So as for me, I catch spikes. So I don't usually trade these kind of setups because this market is bearish, of which gain we have to trade going upwards. We're supposed to trade it along this way. When the market was going up like this is where we're supposed to enter our positions. So let's look for another pair. So this thing will show you how you should trade, guys. It's simple if you check it on a bigger screen. As you can see, now we can see the overall trend. Here the market once went up. Here the market is shoddy. It's not going to any direction, but now it has confirmed the signal here. That's why it's now dropping. So there's a chance that it can drop to this point. So you also need to understand more about the candlesticks, guys. Here, you also need to know about the candlesticks. These are the candlesticks. You should know the meaning of these candlesticks. This is going to be a pin bar, a bearish pin bar, right? Then after that, we have a Dutch candlestick here. Usually, when you see a Dutch candlestick, it means the market is not yet decided. Because if you check at this pin bar, it did not cross this candlestick. So there was still a chance for the market to go up. But here, it produced a Dutch candlestick, which means the market was now undecided. After that, it made a huge red candlestick. That's why the market dropped like this. But if you check clearly, there was resistance around this area. That's why the market did not manage to cross this zone and pulled back. But it later crossed that resistant area because that is what usually happens. When the market fails to cross a resistant area, it will cross it on the second time. So you should take note of that. Let's say you have closed your profit here, you're trading profit around this point. If it pulls back again, don't hesitate to enter it again because usually it will cross on the second time. So here we can see we were given this kind of a candlestick and it was engulfed by this one. So whenever you see a candlestick engulfing a previous candlestick, what you do is you wait for a retracement. So your retracement will be based according to the behavior of the market. So here in this point, the market pulled back, but usually you should put a horizontal line on the where the wick ends like this. Okay, as you can see, our week ended here, which means this was the confirmed direction of the upward movement, right? So we were anticipating that it should pull back to this line, to this blue line. That's why it went upward to this blue line. Then this is where you start to enter your sell positions, but you don't go full margin. You add bit by bit until the market confirms that direction. Here we can see that the market made an impulsive move going downwards, but like always, it will always pull back to that entry point and make an impulsive move later. So basically, whenever I see a trade, if you want to hold it, don't hold it on the first time. You hold it on the second time because that is when it will make a huge movement. Usually on the first time it will make a small movement, but on the second time it will make a huge movement. Then on the other hand, avoid trying to use price action when the market is when the market has reached the area with a lot of resistance. For instance, let's say around this point. You can see that here there's a lot of resistance. The market failed to cross this area, so the market was playing around this area. So even if you draw your price action trend lines around this point, even if it breaks, it's most likely to be a fake breakout. So avoid trading such kind of setups. So we usually recommend people to trade when the market is going the way you want to place your trade. Let's say the market is going up, then that is where you are supposed to look for a buy opportunity. But if your market is going down, look for a selling opportunity. I don't recommend people to enter buy entries around this area. Why? Because the market, as you can see, it's dropping and it's very visible. So if you enter here, you're most likely to get liquidated and end up saying this thing does not work at all. So you have to know more about these candlesticks. For instance, here we have another pin bar, but here this is a bullish pin bar. But if you check clearly, it's what? It's red, which means the market did not confirm a huge sale around this area. It means there is a rejection around this area. That's why you can see that the market is playing around this zone. Let me show you. The market is playing around this zone. It's because of that rejection. How many times did the market fail to cross this zone? It's because of this rejection. The market made a pin bar pointing upward, but it's red. It's a sign that there's rejection around that area. So what you do is you wait for the next signal, which is this one. But here it wasn't a confirmed buy, but you can also enter it using a smaller time frame, because if you go on a smaller time frame, you can see a flag. Let's see. Right. So this is our smaller time frame, and as you can see, the market was moving like this. Here, it did not produce a flag, but another thing you can do is you can also use the principle of these candlesticks. Let me try to zoom it a bit. You can see that here it's spiky going upwards. So this is another side that you can try to catch spikes around that area. Okay. So I'm going to check another pair. Let's try to check gain 800. This is our gain 800. So I want to show you something. Here we can all see that around this zone there's a lot of rejection, guys. There's a lot of resistance. That's why the market rejected around this area, started to sell. So this is why I was telling you that avoid trying to apply price action here, because here we can see even if we draw our trend lines here, it's going to give us a breakout, but the breakout won't be real. Yeah, you can see now it's a breakout whereby this spike crossed this upper trend line, but it's not a real breakout. Why? Because it's around this resistant area. So what you do is you look for a sell entry around this area. You cannot buy it here. So that is how you should analyze the market when you are trading using the Weltrade broker. So here we're going to draw our trend line so that we can see whether the market crossed this zone. Here we can now see that the market just changed the structure. So we are assuming that the market should sell to this point. The market should sell to this point before it starts to make another impulsive move going upward. So the market should sell to this point, but it will spike along the way. So you have to check the way it's spiking. How do you know the areas where it's going to give spikes? We now have to draw horizontal lines. Here we can see that here we have resistance whereby the market spiked and turned around this area, spiked again, turned, spiked again, turned. So this is our first area with the resistance. Then this is going to be our second area, this one, whereby the market turned around this zone. So this is going to be our second area. So basically, spikes are going to take place here or here. If they don't take place around that area, it will take place here. So let me draw all the visible points. This will help you to know that if the spikes start to spike around this zone, if it gives you more spikes, then it means the market can go back to this zone. So you should close. So basically, this is how you'll be trading using this analysis. So I want you to try this kind of analysis when you are trading on this broker. Then you tell me whether it works or not.